888-595-7779. That's 888-595-7779. Now, today's edition of The Real Estate Show.
And hello, South Florida. Hello, rest of the real estate world out there. Welcome to our TGIF edition of the Real Estate Show. That's right. It's Friday, and that means it's TGIF to the third degree. Thank God it's Friday. Thank God it's Florida. And thank God for many of you, it's finished. My name is Eric Willner. I am the host here of the Real Estate Show, South Florida's #1 program about real estate and America's longest running daily radio show all about the singular topic of real estate. While being a singular topic, it sure is not limiting. We always got lots to talk about, and that's why we are live 5 days a week. As we like to say, 5 by 5 by 5, 5 days a week, 5 p.m. in the afternoon. That's Eastern time. And we are here 5 different ways that you can consume the radio show. You can listen to us live on our AM station, AM 1470, on our FM network at 95.3, 96.9, and a couple other ones, all part of the Money Talk Radio Network. You can also download our show on our website at automaticlandlord.com. You can listen to us live there. If you happen to jump on our website, automaticlandlord.com at 5 p.m. You can hear us live because we do stream it there, but you can also download the latest version there in a podcast version, or you can go on the website and choose from years and years of the radio show. They're archived and on demand, so you can listen to us there. You can also take us with you by downloading one of the free apps, such as the iHeartRadio app, the TuneIn app, the radio.com app, and including WWNN, who also has an app. And all you have to do is search for WWNN Money Talk Radio, and you can take us with you on your cell phone or other portable device, the app, the tablet, etc. So that's 4 ways. And the 5th way is not only can you hear us, but you can watch us on our Facebook live broadcast. And so all you have to do, if you have a Facebook page, just type in the search bar button without any spaces, The Real Estate Show. Get you there faster. If you don't have a Facebook page, you can still watch us on Facebook. All you have to do is type in a little bit more, facebook.com/The Real Estate Show, without any spaces either. So those are 5 different ways to consume the radio show. After we have broadcasted 5 days, today being the 5th day on our Friday, you can also, one more option, as if that wasn't enough, one more option, you can catch up. And instead of your daily dose, you can get your mega dose, or all the shows the entire week back to back, starting at 9 p.m. on a Sunday night on any one of those stations, on all of those except for our Facebook Live, because we're not doing it live at that point. So, but all of the shows are archived also on our Facebook, so you can definitely catch us there. So every week, just a little summary here, we pick a theme, a topic, if you will. And that topic is what we'll be talking about for the entire week, just from different perspectives. So Mondays, we start out laying out our agenda that we're going to be talking about a certain topic. This week was still, the conversation was a lot about the forbearance and the moratorium. And it's kind of like the fox and the hound, right? What will it lead to? And so on Mondays, we kind of go into the definition, the background, and so forth. And so I'm only going to hit the highlights, but everything that you want to know about it, you can just go to the full version. Just go to our website. Again, that's automaticlandlord.com. And when you go there, you can listen to the entire show. That's under the real estate show notes at the top of the page. So then we lay out the agenda. Tuesday, we go more into our tools, tips, and techniques. And we were talking about some of the different ways of getting out of forbearance. We were talking a little bit about the difference, by the way, between ownership and renters. And this is where you're going to see the biggest sort of divergence in how this plays out. And what I was trying to explain throughout the week is that a lot of the homeowners, including landlords where they had the capability, but a lot of the owners of real estate have come off of the forbearance voluntarily. And they somehow got back on their feet. They started making the payments. Maybe the tenants started paying the rent and the landlord started paying the rent. Maybe the tenants didn't, but the owners, they started making the payments or made a workout plan with their lenders. Smart thing to do. Many homeowners who then either realized that they were back at least strong enough to make their payments, don't want to lose their house. And who wants to lose your house in a rising real estate market where most everybody has equity, some people a lot of equity. So no matter what, it's in everybody's best interest to get back into a payment situation. But the bottom line is that on Tuesday and then Wednesday, when we go into our headlines in our midweek report, we were talking about how at the peak, when the moratorium was first put in place by the federal government, there were over 5 million homeowners or property owners that went into forbearance or were delinquent. And yes, there is a difference, and that's another important little definition, is there is a difference between forbearance means that you have communicated with the bank, and either because they offered it, and yes, they were offering it to some of their clients, or because you requested it. Because if you read the government's proclamation, they say that you have to ask for it. So sometimes a lender called you up and said, do you want to ask for it? Now remember, the lenders are going to get paid. They're going to get paid the payments plus the interest. So they were just trying to, work together with everyone at the government and so forth. But ultimately, remember, they are a for-profit business, and there are shareholders that depend on it and so forth. Then we talked about how about 60% of those homeowners that went into forbearance have since come off in the 14 plus months that we've been in this quote unquote pandemic. Be interesting. What does it take for the government or the World Health Organization to come out and say that the pandemic is no longer a pandemic? I haven't looked into what those guidelines are, but we'll see what they are. But as you know, certain states faster than other states here in the United States, but the United States is quickly ramping up and getting back into the swing of things to normalize things as much as possible. So, like I said, 60% of those that went into forbearance have now come off. Now, there's still the element of the delinquencies of people who never even contacted their lender, were not contacted, or avoided contact with their lenders. Not a smart thing to do. And so those will be the distressed properties. But like I said, a fraction of what the major problem was at its peak. I think it will not create the so-called foreclosure tsunami that a lot of people out there trying to sell you something will tell you that is coming. And between the REO companies that we spent a whole week talking about that, the asset management companies, we spent a whole week talking about that. We talked about the investors out there, the buyers, the institutional buyers, all standing ready and well-financed on the sidelines, waiting for the moratoriums to lift. And once those moratoriums lifted, the investors will go into action. The lawyers will go into action. The banks will go into action, and they're going to try to clean up this mess as quickly as possible. Moreover, I also have been telling you that a lot of the lenders have said that don't be surprised when a lot of the properties that do get foreclosed don't come right back on the market, as they have already declared that they're going to be holding on to some of these properties and rent them out. They're going to act like landlords themselves, collecting the cash flow to make up for lost time. So they're going to take advantage of a rising market, the cash flow. So as you can see, the banks rarely lose in these situations, and between insurance and the government, they almost never lose. So don't worry about the banks in this situation. We're worried about the individual homeowners, and that's why, if you want to contact us, if you have a situation, if you want to ask a question, come onto our Facebook Live. You can ask us questions there. Go to automaticlandlord.com. You can ask us questions there, or you can text us on our dedicated text line, and all you have to do is text the word loan if you're a homeowner out there, and then we'll know to contact you out there. Now, then, so that was our Monday, Tuesday tools, tips, and techniques, and we were talking about some of the techniques and the tools, some of the tips that we thought would be appropriate for this whole conversation. Now, on Thursday, we started getting into a little bit more on the tenant side of things. Now, the tenant side picture is unfortunately a lot worse than the homeowner side. And in fact, I spent time on Thursday, which is our ATM edition of the Real Estate Show, and I was talking to you about how there is a dramatic difference. And I will tell you that I think it is educational, I think it's psychological, and I think it's demographic, I think it's financial. The difference between a renter and a homeowner from a perspective is just, completely, there is a distinct difference. In fact, on our ATM edition, About the Money edition on Thursday, I even went on to explain the financial difference, because that's the easiest one. The numbers people can really understand. And I went in and I broke it down two ways. The average net worth of a homeowner versus a renter, and the median net worth between a homeowner and a renter. And the reason why it's important to understand the two of them is because the average can be skewed, right? We were talking about the $10 million homes, $50 million homes, which often are not bought with financing because a lot of lenders won't put that many eggs in one basket. So there's huge amounts of equity in the huge priced houses. So anyway, the average net worth of a homeowner is $1.1 million. Now, like I said, it's skewed. It's higher than what you're going to find out the median, which is a little bit more down to earth. But the average renter's net worth is about $65,000, which, P.S., in the scope of a retirement plan, that ain't going to carry you. And when you look at it, it's more than 10 times better to be a homeowner in terms of net worth than to be a renter. Renters have less than 1/10 of the net worth on average across the country. And then when you look at it in terms of the mean, now the mean is a little bit more meaningful, no pun intended. But what you see with the mean is that that means that half of the population is less than the mean and half of the population is greater than the mean. So if it was a bell-shaped curve, it would be the fattest, highest part of the bell-shaped curve. And the mean net worth of a homeowner in this country is $255,000, $250,000. The mean net worth of a renter is only about $6,300. In other words, it's even not just 10 times better. It's like 25, 30 times better when you look at it across the country. It's that significant, which is why, if you'll recall, when I say this at least once a week, the mission of the Real Estate Show here is to educate and empower more people to become homeowners. And that right there is one of the biggest reasons why. But I've also done some research and shared with you the figures on the fact that homeowner children have higher grades, get into better colleges, get better jobs, start off making more money, and ultimately make more money because there are psychological benefits in addition to the financial benefits. Anyway, we're going to go ahead and take a quick break here. A few words from our sponsors. I'm going to talk a little bit more about the numbers about now. Let's talk about the end of the moratorium, or is it? So we'll talk about that right after this break. You're listening to The Real Estate Show. My name is Eric Willner. Please don't touch that dial because we'll be right back. I've got an assistant here on the show today.
The safe and simple approach to
You
buying
can say hi now.
Hello.
Say hi to Erica out there. Say hi to
Wait, want me to join?
Twyman. Say hi to Eric Sanchez, Joanna.
Hello, everybody.
Say hello to Michael.
Hello,
See, those are-
Twyman Davis. Hopefully, I didn't mispronounce that. Hello, Eric Sanchez. Hopefully, I did not mispronounce that.
All right,
Joanna Clark.
we're coming back, buddy.
Hello, everybody. Hopefully, you enjoyed this episode of the Real Estate Show.
Ask Jordan. Jordan, ask him if you can have a like. And welcome back. For those of you just joining us here on The Real Estate Show, my name is Eric Willner, and I'm your host as we have been broadcasting this radio show now in our 23rd consecutive year. For 23 consecutive years, through good times and bad times, The Real Estate Show here has been giving listeners, real estate owners, investors, the information that you need, because ultimately our goal here is to help more people become owners of real estate for all the benefits that we've been talking about. And that's what we've been talking about today is the divergence between not only the net worth, the benefits of home ownership that are going. This is, I think, where you're going to see the biggest difference when they do lift the moratorium here from the pandemic. And the banks and the lenders are allowed to foreclose on the homeowners that haven't paid. A much smaller number than the number of tenants who are at risk right now, who may not have started paying their rents again. If you can, I highly recommend that you do. The number one, I think the biggest tip I'll tell you is communication. Communicate with your lender if you're a homeowner. Communicate with your landlord if you are a tenant. The best situation is for everybody to work something out, a payment plan, a way for everybody to end up whole. It just may take a little bit of time. But ultimately, when there's no communication, the lender has no option other than to go ahead and foreclose. The landlord has no option. Don't blame the landlord for evicting somebody that he can't even get a hold of and is not making payments on there. So I had mentioned during the week that the forbearance numbers dropped again for the third straight month. Last week the numbers dropped from way above 5% to 5%, and last week it dropped to 4.22%. So it's getting the picture's getting better and better on that front there. Then we talked a little bit. There was an article where we shared how most homeowners, like I said, 60%, have exited mortgage forbearance programs, but the ones that are left are the ones that are probably in the most trouble, i.e., the most vulnerable right now, because there's probably a reason why they're still in those programs. They either haven't gotten back on their feet. And don't forget, believe it or not, even in the hottest economy that we had back right before February of 2020, the market was hot, white hot. The stock market was reaching record highs. The real estate market was hot, and it's and both still are. But there were people who were in financial distress then, because there's always divorces, there's bankruptcies, there's failed businesses, there's all sorts of distress situations that happen. And so as a result of that, those people back in February of 2020 literally got saved by the bell when the World Health Organization declared that there was a pandemic on March 11th. And then the government shortly thereafter enacted the CARES Act, which then included the moratoriums on both foreclosures and evictions. So only 35% of borrowers, or about 2.2 million homeowners who signed up for forbearance, remain in these programs now. That was according to the New York Fed. So the problem is that the borrowers in the subprime credit score buckets are much, much more likely to have both entered forbearance and still be in forbearance at this point. And that also was part from the New York Fed. In contrast, and this is like we like to say a lot of times, thanks, Captain Obvious. But in contrast, homeowners with the highest credit scores have typically already exited forbearance, which is why we often talk about credit and how we have used the payment vacation, which was not supposed to be reported on your credit bureau as a missed payment, as a super opportunity to fix your credit. So it's not too late. If you are experiencing any credit challenges, text the word credit to 561-861-2366. That's 561. It's going to be the same number for all of the keywords that I'm going to give you in the next remaining minutes of the radio show. Text the word credit to 561-861-2366. I don't care whether you don't have credit. That's an issue. I don't care if you have bad credit. I don't care how bad the credit is. It can be improved. And in fact, ultimately, we've taken credit scores from the 400s into the 700s, and all in the space of about a year or so. It all depends on what it is and who it is. But text the word credit if that's an issue. We're going to show you, we're going to send out a free report on some of the things that you can do yourself, but then we'll also tell you about some of the things that we can do. You've heard us talk about how to credit pop somebody, and it doesn't sound like it sounds like it'll hurt, but literally we can raise the score 50 to 100 points almost immediately, and certainly within the first 30 to 90 days. All of this depending on you doing your part, being open and candid with us, sharing a copy of the credit report that you have, and we'll give you the advice of what to do. So like I said, those people who have great credit are probably not even in forbearance anymore and are not at risk. And then finally, I wanted to share a little bit about we talked about the selling seasons and why right now, if you're thinking of selling into strength is a great idea. Again, any questions about any of these things that we talked about this week? Next week, we're going to talk about the ideal way to find properties and how to build that network. We're going to talk about the ideal brokerage that can help you to find that. If you're an agent, you want to pay attention to this. If you're an investor, you especially want to pay attention to this, because I'm going to bring some resources that I think you're going to find super interesting. So that'll be what we're going to be talking about all of next week. Anyway, you've been listening to The Real Estate Show. This is our TGIF edition of The Real Estate Show wrapping up. Remember, you can listen to every one of our shows rebroadcast either on our website at automaticlandlord.com on demand, or just enjoy it back-to-back Sunday night starting at 9 p.m. Otherwise, we'll be back again here, same place, same time, every weekday afternoon, 5 p.m. in one of the 5 different ways that you can consume this show. This is Eric Willner signing off, reminding you to drive safe, wash those hands, and make it a great day. Bye-bye.
Bye, everyone.
Thank you, man. Have a great weekend.
I am happy to help I enjoy your show.
Assist you with your financial needs. If you have any questions about today's program,
You too.
or to arrange a consultation,
I hope you guys enjoyed this episode of The Real Estate Show.
That's 888-595 $77.79. And join us every day at the same time, right here on South Florida's
That's
Blaze
pretty
Talk
good.
Radio. The opinions expressed on this sponsored program are
Real
those
estate.
of its hosts, guests, and callers and are not necessarily those of this station and staff management for sponsors.
We're going to talk about the ideal brokerage.
Next time we're going to be talking about the ideal brokerage, and make sure you stick around for that because it's going to be very interesting and it's going to help you a lot. And I hope you guys really enjoyed this episode, and drive safe, wash those hands, and make it a great day. Bye-bye.
That was awesome, buddy. Take care, everybody.